I highly welcome you once again to AE Accounting Tutorials. We are continuing our series on accounting for hire purchases. But in this video, we will be taking a full practice question where we will be required to account for transactions in a book of a hire purchaser. Is that okay? So if you are new to my channel, I will encourage you to subscribe to this channel. Turn on your notification bell so that any moment I upload any new video, you will get notified. Thank you. So let's quickly go through the question together and try to solve it out. Is that okay? So, Bestman Brewery Limited wishes to expand its production line and have purchased a new packaging line from Dual Engineering on high purchase terms at 1st January 2019. The list price of the line as disclosed by Dual Engineering was 270,000 Ghana cedis. The hire purchase agreement provided that Bestman Limited will pay a deposit of 45,000 Ghana cedis on 1st January 2019 and 2 annual installments of 120,000 Ghana cedis on 31st December 2019 and a final installment of 101,954 Ghana cedis on 31st December 2021. The true rate of interest is 25% per annum. The depreciation policy of Bestman Limited is to write off the line to nil value over 10 years on straight line basis. The total cost of manufacturing the line to Dual Engineering was 216,000 Ghana cedis. Required: account for the above transactions in a book of Bestman Limited. Okay. So before we begin to solve this question out, we need to analyze certain key things in this question, okay? First of all, we are accounting for a transaction in the book of Bestman, and Bestman here is the hire purchaser. Is that okay? And Dual Engineering is the hire vendor. So the cash cost price of the assets, and the asset here is the packaging line, okay? So the cash cost price of the asset is 270,000 Ghana cedis, and Bestman Limited will make an initial deposit of 45,000 Ghana cedis. And there is an agreement between the two for an installment payment as well. And the interest rate that will be applied on the remaining balance at the end of every financial year is 25%. And there is a depreciation policy as well from this question. And remember that because we are accounted for a transaction in a book of Bestman Limited, who is a hire purchaser, the manufacturing cost will not be needed over here, okay? We only use a manufacturing cost or cost of production or cost of sales when we are accounting for transactions in a book of a hire vendor. Is that okay? So we are working in a book of Bestman Limited. So let's begin our solution. So Bestman Limited. Okay, so the relevant accounts over here are the asset account, the hire vendor account, the hire purchase interest account, the statement of financial position extract, and statements of profit or loss extract. Is that okay? So first of all, let's open the hire vendor's account. The hire vendor here is Dual Engineering. So Dual Engineering account. He is the hire vendor, okay? First of all, we open this account. We open the asset account as well. The asset here is the packaging line. So we have the packaging line. Packaging line account. Alright. So this is the asset account. After this, then we open hire purchase interest account. So hire purchase is HP. Okay. interest account. Then I bring my currency sign. The currency sign. Alright, the cost cash price of the asset is 270,000. So we debit the asset account and credit the high vendor's account, because it is the high vendor that sells the asset to Bestman. Okay, so you credit the high vendor's account and debit the asset account. So that will be in 2019, 1st January. Okay, so Dual sell an asset of an amount of 270,000. So we credit Dual Engineering the same 2019 because the transactions begins in the year 2019. So 1st January, that is packaging line. Okay, packaging line being the assets. Okay, the amount is 270,000 Ghana cedis. Okay, so we are done with the first double entry principles. The next thing we have to consider here is the initial deposit. Okay, so this initial deposit has been done at the beginning of the financial year. So any deposit that will be made will be debited to the high vendor's account in order to reduce the asset value. Okay, so as I said, any money received by the high vendor will be debited to high vendor's account. But remember, we are making the accounting arrangements in the book of Bestman Limited, who is the high purchaser. Okay, so don't forget. But the payment has been made at the beginning of the year. That is the initial deposit. Okay, so the same 2019, that is 1st of January. Okay, let's say Bestman make payment through bank. Okay, but remember it is a deposit. Okay, initial deposit. The amount is 45,000 Ghana cedis. Is that clear? Now that we are done with this entry, remember that there is also a first installment that is being made at the end of the 2019. Okay, so we consider the first installment as well. From the question, first installment has been made at the end of 2019 of an amount of 120,000 Ghana cedis. Okay, so anytime an installment payment has been made, it will be debited to the high vendor's account to reduce the asset value. Is that okay? So that is at the close of 2019. Okay, there is a deposit. Maybe he has paid through bank. Okay, and that is first installment, not deposit, but rather an installment payment. Okay, an installment, and the amount is 120,000 Ghana cedis. As at this point, we are done with all entries for the year 2019, and we have to consider the interest charge or the interest component at the end of the year, and the interest component will be calculated on the remaining balance. Okay, so for this year, for this particular year, he has made an initial deposit at the beginning of the year. So in order to determine the interest component, we take the deposit at the beginning of the year from the cost of the asset and calculate the interest on it. Okay, we will not subtract this installment payment because the payment has been made at the end of the financial year. Is that okay? We want to know how much is owing at the close of the period. So what we do is that we have the 270,000 minus 45,000. That will give us 225,000. Then we apply the 25% on it. Is that okay? So when we apply 25% on this, it will give us 56,250 as the interest component. Okay, and this interest is the high purchase interest for 2019. Okay, so when we come to high purchase interest account, we debit it because it is an expense. So that is 2019, and we calculate interest at the end of the year. Okay, and this interest will be received by Dual Engineering, who is the high vendor. So we debit the high purchase interest account and credit the high vendor's account. So this will be Dual Engineering, and the amount is 56,250. So this will be at the end of the year, 31st December. Okay, HPI, that is high purchase interest. Okay, so corresponding to 56,250. Okay, so we are done with the entries for 2019. So let's try to close this account. Obviously, the credit side is bigger than the debit side, so the total here will be 326,250. The same applies to the debit side, 326,250. Very good. So now we need to know the carry down. Is that okay? So the balance CD, that is at the end of 2019. The balance CD will be the difference between these two. We add these two, subtract from the total. Okay, and that is going to give us an amount of 161,250 Ghana cedis as the carry down. Okay, and this carry down for 2019 becomes the opening balance or the brought down for 2020. So we come to the year 2020, we bring the carry down as 1st January as brought down. So balance brought down, and the amount here is 161,250. Very good. Is that okay? So the same 2020. But remember that for 2020, from the question, there is also an installment payment. Okay, and this installment payment has been made at the end of 2020. So as at 31st of December, there is also an installment payment. So let's say bank, through bank, but this is a second installment. Okay, the amount still remains 120,000 Ghana cedis. As at this point, we need to determine the interest components. Okay, and the interest here will be charged on this balance because this amount is there from January to December before the second installment. Okay, so we can subtract this from this before calculating interest, just because this amount has been paid at the end of 2020. Okay, so this amount was there for January 1st to December 31st. So we calculate 25% on this amount. Okay, that will give us the high purchase interest. High purchase interest. Is that okay? When we make such calculation, that is 25% on this, will give us 40,312.5. Is that okay? And we can round this to the nearest whole number. So 40,303. Very good. So this high purchase interest for 2020 is also an expense. So we debit it to high purchase interest account, that is 31st of December, from Dual, because Dual Engineering received this interest, and the amount is 40,303. Very good. So we need to close the account for 2020. By closing the account, we can actually realize that the credit side is bigger than the debits. Okay, so the total here, when we add these two, it will be 201,563. So 201,563. So we find the difference between these to get it carried down. So as at 31st December, the balance carried down will be the difference between this second installment, and the total. Okay, that is going to give us 81,563. Is that okay? And this carry down for 2020 becomes the opening balance for 2021. So we come to 2021, 1st January, we will have the balance brought down, okay? And the amount is 81,563. And from the question, there is also a final installment of 101,954 on 31st December 2021. So another installment, okay? So we come to 2021. Payment has been made at the close of the period, okay? So it is through bank, but this time a final installment. Very good. And the amount involved is 101,954. Is that clear? And now we have to determine the interest component at the end of 2021. And payment has been made at the end of the year. So we calculate the interest on this amount, the balance brought down. And 25% on this will give us an amount of 2,391. Very good. So that will be 31st December. So high purchase interest will be 20,391. This. So at the end of the period, there will be no balance, okay? So 101,954. 101,954 being the closing balance. So that at the end of the period, there will be no balance, okay? This means that as at this point, Bestman Limited can have a full ownership of the packaging line, which is the asset. Is that okay? So we can close this asset account as well. So 270,000, we can close it off. Okay, but remember, we need to enter the interest component for 2021. Okay, because this interest is also an expense. So for 2021, at the close of the period, from Dual Limited, okay, so Dual Engineering, and the interest component is 20,391, okay. And remember, the high purchase interest is an expense to Bestman Limited, okay, and it must be debited to its statement of profit or loss or income statement. So we will transfer this amount to income statement by crediting this account and debiting income statement. So we close it by saying that for 2019, on 31st of December, income statement. For income statement, the amount is 56,250. So this is closed, okay? So we come to 2020, okay? At 31st December, we have income statement. We have income statement of this same amount, 40,313, so that we can transfer it to the income statement because it is an expense. So for 2021, on 31st of December, remember, we transfer this to an income statement as well as an expense. So we'll be debiting the income statement of an amount of 20,391. Okay, so we are done with the preparation of the high purchase interest account. Okay, so this amount will be transferred to the income statement. Is this clear? Okay, so because of the board, I'll clean this place and prepare the income statement extract or statement of profit or loss extract, and I'll prepare the statement of financial position extract as well. Okay, this is very simple, so follow me as I take you through. Okay, so let's look at how we prepare the income statement extract. Okay, so those high purchase interest that we just transfer from the high purchase interest account, it is an expense, so it will be debited to the income statement. So HP interest, high purchase interest. Remember, the first interest for 2019 is 56,250. Sorry, 56,250. For 2020, it was 40,303. For 2021, it was 20,391. Is this clear? Alright. But also remember that there is a depreciation policy, and depreciation is also an expense. So we have to debit it to income statements. The useful life of the asset, which is the packaging line, is 10 years, okay? And the cost of the asset is 270. So depreciation is calculated by the cost. So depreciation is cost minus residual value. The residual value over the useful life, okay? Useful life. That is the estimated useful life. So the cost is 270,000. There is no scrap value, so 10 years. And this is going to give us an amount of 27,000 as an annual depreciation, okay? So when we come to the income statement, we say depreciation charge, okay? For the year is 27,000, 27,000, 27,000. And we are done with the income statement extract, because this is just an extract. Is that okay? So now let's look at the statement of financial position extract as well. So remember that with the statement of financial position, it's also an extract, okay? So we begin with the non-current assets. The non-current assets. So with the non-current assets, we have packaging line, okay? So we have packaging line. And this packaging line is a PPE item, property, plant, and equipment item. So for the cost of these assets is 270,000. 270,000 as the cost of the assets. Now we look at the depreciation, the annual depreciation. Okay, this annual depreciation will become the accumulated depreciation over here. So accumulated depreciation. So with the accumulated depreciation, you have 270, you have 27,000. So this will be 54,000. That is adding this annual depreciation 2019 to 2020 will give us 54,000. Then we add the 2020 to 2021. That would be 81,000. Okay, as the accumulated depreciation. Is that clear? So we can subtract by taking this from this to get 243,000, 216,000, and this will give us 189,000. Is that okay? And this will be the carrying amount, okay? The carrying amount or the net book value. Is that okay? Very good. So now after looking at the carrying amount, Let's consider the liabilities. Okay, so with the liabilities, you want to know how much is due, okay, that have not yet been received at the end of every year. Is that okay? So we have hire purchase outstanding, okay, the hire purchase or HP outstanding or owing. So we come back to the dual engineering account, that is our creditors account, Bestman Limited creditors account. Okay, do you get the concept? I mean that Bestman is the high purchaser, dual engineering is the high vendor. Is that okay? So we want to know how much that Bestman Limited owns at the end of the year and he is not able to pay. So we can say that the carrying amount over here is 161,000. For 2019, 161,250 becomes the high purchase outstanding. That is 161,250. For 2020, the carry down is 81,563. So 81,563 being the high purchase outstanding. Therefore, 2021 there is no balance. Okay, so there will be dash over here. Is that okay? So basically, this is how we account for transactions in the book of the high purchaser. Is that okay? So this is the accounting arrangement. So in our next video, we will be taking another practice question where you will be required to account for transactions in the book of the high vendor as well. So if you haven't subscribed to this channel, you just subscribe to the channel so that any moment I upload such videos, you will get notified. Until we meet for our next video, I think it is bye for now.